Everyone, welcome to the market snapshot for today. So, I think I have given two contradictory messages in my last two videos. On Wednesday, while the US market rallied, I said the either you should not be trading it or you should have an exposure of not more than 25-30%. And yesterday, the Indian markets looked very good. Not yesterday, the prior session. And I still said the exposure cannot be more than 25-30%. And let's try to understand what I said and what has market played out. Looking at the numbers, Nifty 50 stands at 24,317, which is around 0.28% higher than the prior close. Nifty 500 as at 23,353. Nasdaq did pretty well, it was up by 3.36% at 28,106, and S&P 500 at 7,437, which is up by almost 1.7%. This is Indian markets. Nifty 500, the advances were around 162, two declines of 338, new highs 16 to new lows of 484. And the breadth is not improving for sure. Above 20 EMA 239 stocks, above 50 EMA 281 stocks, above 200 EMA 280 stocks. Looking at the charts, this is Nifty 50. Nifty 50 has shown momentum from last 5-6 sessions, and I think that is what I have been telling. The while this this turnaround started happening for the Indian markets in the month of March, April. The small caps were the one who were leading it, but somehow entire July's data is stating that again that regime will change, and majorly the liquidity will keep flowing towards the larger cap and defensive sectors. And for sure, what looked like a very strong bet in terms of small caps, micro caps, I don't think that looks very sustainable at this point of time, and majorly a lot of liquidity is moving towards larger caps. This is a Nifty 500. Again, similar story. The chart looks good. Last 4-5 sessions have been strong, but I think a lot of liquidation is happening even at Nifty 500. At this point of time, the best looking numbers are for maybe Nifty 50, Nifty next 50, Nifty 200. That's where a lot of liquidity is moving, and I think that is where your bet should be. I started off by saying I made two contradictory comments, and how has markets played out. If you remember yesterday, what has happened is the Indian markets, the day before yesterday, the Indian markets had closed very strong. But then what actually happened was, just try to understand through this perspective. Nifty is bullish, but the participation became mixed from strong, and breadth is still strong. Whereas Nifty 500 is still bullish, participation became weak, and breadth has become mixed. Honestly, the market is giving you very mixed signals. There is nothing which is sustaining. I mean, in terms of Indian markets, the positive which I see is it is not deteriorating, but for sure it is not sustaining, it is not rising. I mean, even though the chart looks like it was up by 1%, 0.5%, but somehow the data is not supporting any of that. So that is the reason. And the same story about the US market. While I said the US markets looked very good, but then all of a sudden in the prior session they had huge amount of sell off. So that is what I'm telling you. Neither VIX is indicating much. When you look on daily charts, in isolation they don't tell you much. But I think, like, I won't say I track the markets in a very comprehensive way, but I think whatever I do, it helps me for sure to understand, to have a better understanding of the market. And I'm a firm believer that I definitely don't want to predict anything. I mean, whatever my data suggests, I just try to build, on that path. At the same time, I definitely don't go for any predictive kind of behavior about markets, because markets are ruthless. I mean, literally I mean, at our level it is very difficult to to predict market, and I don't think at any level that is possible, because of because of large number of macro factors, I mean, different style of investing. So that's the reason I think markets are a different kind of a beast, and we should definitely try to avoid, predicting or anticipating the markets. Coming to the US markets, the advances were around 306 to declines of 194. Again, strong numbers today, which is, I mean, much better numbers than what happened yesterday. Yesterday, it was terrible in the US markets. New highs 7 and new lows 493. The breadth, like I have been saying, the markets have not been doing good, but the breadth was sustainable till now. But early signs showing that even breadth has started deteriorating. Above 20 MA 287 stocks, above 50 MA 322 stocks, above 200 MA 339 stocks. So just look at this chart. I mean, it was a powerful day for Nasdaq 100. It was up by almost 3.5% yesterday. uh, but honestly, for me, whatever the chart did yesterday, the overall data tells me like it's not a very attractive market. At the same time, leave about attractive, I'm not even looking for any trades in Nasdaq 100. uh, this is S&P 500. This is where, this, either I'll avoid US market, or if at all I want to have an exposure 20-25%, this is where I would want to bet. I mean, there is no other index which I'm looking at this point of time. And again, purely on index, I don't think I would do anything. It will be very sectoral. The reason being, there are pockets which have strength, not the entire market, and you literally need to scout that. Majorly into defensive sectors, healthcare, large cap technology, uh, then your financial sectors. Those are the sectors, which are doing well, in both the markets, Indian market and the US markets. This is Russell 2000. Again, it has, retested 50 MA. It is showing, I mean, it shows that it is gaining strength, but somehow the data is not supportive. So for me, that becomes irrelevant, even if it has, claimed back 50 MA. So that's the reason I'm saying, for me, Nasdaq 100 and Russell 2000 don't make much sense. S&P 500 just makes sense in case of, very desperate attempt, like I really need to trade invest. In that case, that's a viable option. Again, not with an exposure of more than 25-30%, that's for sure. The overall summary for the US market: Nasdaq bearish, participation mixed, breadth mixed. S&P 500 bullish, participation is strong, breadth mixed, and Russell 2000 bullish, participation mixed and breadth mixed. So like I have been saying, for me, US markets, it is only S&P 500 at this point of time, that too only particularly into defensive sectors, not with an exposure of more than 25-30%. So what is happening at macro level? The yields came down yesterday. So Fed Chairman Kevin Warsh had a uh, press conference. I think at Fed's level also, the thing is, we are not getting very clear signals, what exactly uh, Fed wants to do short term. I think their only objective seems to be controlling inflation. They are not talking about whether they are planning to ease or tightening. So I think, overall pretty mixed signals from Fed also. So I mean, whatever we are getting, I mean, with a rising yield, rising dollar, markets being very volatile, I think the best approach is to remain conservative for time being. The markets have given enough. I mean, I think last 3, 4, or maybe 5 years have been absolutely monstrous for the US market. Not so for the Indian markets, but then Indian markets have their own challenges. A lot of liquidity comes in from um, external markets, and I think there are a lot of things which have not been supportive of the Indian markets. Overall, structurally, fundamentally, the Indian markets look good, but I think rising dollar is definitely, not helping the Indian markets. US markets, I think, very volatile, very mixed signals. So I think, either to be avoided or to be traded only with an exposure of 20-25%. And the same is the case with the Indian markets till the time, markets literally, start getting a lot of momentum. For instance, yesterday, I think something, last three sessions, FIIs have been buying in India. Ironically, yesterday somehow DIIs ended up selling. So I don't know why that happens, because, Maybe the local the SIP inflows, people are just losing on their patience, because literally in Indian markets people have not made anything almost for 2.5 years. So it's a game of patience, and the overall structure of the market keeps telling us that it is time to remain cautious, because a lot of mixed signals in the market are coming back to the numbers. VIX at 17.09 tells things are neutral, which I don't agree with. BTC at 64,909, it is again trying to claim 65,000. Gold did not move much at 4082. Looking at the chart, this is what happened yesterday. I mean, Fed is trying to its best, to bring down the inflation to less than 2%. Obviously, that is the effect. Dollar is falling, and our falling dollar is going to be an extremely helpful initiative for the US and for the global markets, especially for the emerging markets. So I think that is a very, very good sign that dollar has plummeted a bit. For sure, it will give some boost in the Indian markets as well as the global markets. uh, Bitcoin again, not much movement. Somehow, these entire this phase, Bitcoin has not done much. Intraday opportunities for sure available, but then maybe it seems like an accumulation zone. Maybe it is getting accumulated, but no point predicting anything. If at all it moves, we definitely get to know. And gold is a similar story. I think this is the accumulation zone. A lot of accumulation is happening, but again, we should not be in this phase. Only if things turn around, it reclaims 50 MA, the trend, the 50 MA becomes rising. That is when we plan our entries in the gold. And nothing to do for now for sure, because I think accumulation zones can be longer than what we anticipate. So not much happening here. So overall, my takeaway would be Indian markets. You should definitely, whatever new positions you want to make, it has to be into larger cap companies, majorly into Nifty 200 uh, kind of segments, into defensive sectors like healthcare, IT, mm, consumer durables, reality, I think. And same is the case with the US markets. S&P 500 should be the index, uh, again into defensive sectors like healthcare, large cap tech, and financials, industrials, again not with an exposure of more than 25-30%. And I think that's everything from my side today. I hope you all found this useful. Thank you so much, and have a good one. See you next time.